Well, happy Thursday. What a week. Ash, how's it going this morning?
Great. What about you? Some crazy times we're living in.
What a crazy times on Friday when we talked and I showed you the screenshot on Twitter from Wall Street Bets of a guy who invested $50,000. I was worth 11 million. And I said, we got to talk about this. And we were kind of joking like, I don't know if this is going to be a story. And then Monday, that 11 million was worth 19 million and kind of things got a little crazier in the Reddit community and Wall Street Bets. Um, so we wanted to come on and talk about what's been going on in the week for those of you that have been living under a rock. Massive social media message boards, Yahoo Finance style to when I was a kid. People talking about the stock market as we know and been hearing since COVID began, this revolution against Wall Street by fractional shares and the Robinhood and the rise of retail trading, which we have always said investing in the stock market, while done correctly, is one of the greatest wealth opportunities for most folks. And as those that are watching know, we started this firm to really help and enable people that didn't have access to capital markets and financial advice, giving them. So this hits hard at what we've been trying to do, obviously in a little bit of a different way. But so the rise of retail trading, the rise of fractional share ownership, the rise of people doing their own ideas, and then this wrapped in with COVID. Obviously, people have more time to stare and watch CNBC, other financial networks, and this kind of all fell all in one as Melvin Capital had to disclose basically their short positions, and this Reddit community found that GameStop, yes, that same GameStop that closing stores locally and in just a brick and mortar retailer. A lot of people are talking about it as Blockbuster was to Netflix and some other similarities, but nonetheless proved that the markets are truly a supply and demand. And this Reddit board decided to exploit Melvin Capital's short interest of over 140%, which is unfathomable to begin with, meaning that 140% of the shares were short in GameStop. So if there was demand into buying it, that these hedge funds would have to cover and create massive losses for themselves. So fast forward, we're now Thursday morning. Yesterday was obviously lit the world on fire with GameStop rising over 200%, and then it was dragging some of the other Reddit board stocks, AMC movie theaters, which, as we know, especially as we've been talking about in our county, that's not opening anytime soon. So you have some interesting Bed Bath & Beyond. You have Nokia, BlackBerry, some really, I don't know, call it old tech. I don't know what you want to call it, old retail with Express. As we mentioned, Bed Bath & Beyond. Basically the heaviest shorted names on a list of percentage float. All saw crazy runs. We're just checking as the market is opening as we're recording this, and then these stocks are all over the place. Robinhood is now banned trading on these stocks, so it's just an interesting time. We wanted to come on, be your guide as we can, and just talk about it. So I know, Ashley, you had a few questions that you've been hearing that we can hopefully help answer. And as always, we're available, info@shermanwealth.com, and then on social @ShermanWealth. So let's dig into it a little bit.
Great. Yeah. Well, you did a great job explaining it, and I definitely at least helping me kind of understand everything behind it. But do you think this is going to continue with other short name stocks?
Well, it's really hard to say. The anger against a lot of people on Twitter are calling this like Occupy Wall Street in its fullest. You have these massive groups really, really aligned in their capital, which is very interesting to see. So you saw it really spread. Now there's, Dave Portnoy is going on and talking about 10 other stocks that he feels are buying opportunities. You have people really talking about now the decentralization of finance. So that comes into the Bitcoin conversation, gold and silver. So this could cast a huge net across the world of finance. Again, remember that it's also not just about the stocks that are in the headline news, the GameStops, the AMCs, because for every one of those, a hedge fund will have to sell something that they would rather hold to cover what's called a margin call, meaning that at the end of the day, the hedge funds have to be made whole, and their books have to be made whole. So if they're losing a lot of money on a GameStop, they may have to sell something that is kind of indirectly affected, like an Apple or a Google or something on a hedge fund balance sheet that needs to be liquidated. So it's unclear yet, and we saw it yesterday where the market was really fell off without any news. We saw Monday afternoon kind of a blip. If you look at the chart on Monday at around 11:30ish, you saw a lot of these big tech household names that have, either done real well in COVID, the Squares, the Pelotons. These companies have no relation to GameStop and AMC, but you're seeing that as an indirect, issue. So it's really hard to say where this goes from here. The GameStop, I'm checking again. It's all over the place today, and you see the AMCs and BlackBerries, some of these derivative names down. But GameStop now has a market cap greater than Best Buy. So I think what this proves is really that markets are a supply and demand curve, and that if you don't understand something, that doesn't mean that it can't happen. So really, really interesting to see unfold.
Yeah, awesome. That's totally right. And so for those maybe who did buy into some of these stocks, trying to take advantage of this opportunity and kind of are in the trenches with all of this, like, do you, as an advisor, I think this is a great time to kind of speak to how, if you are involved in this, like maybe take some guidance from here on out, since it is such a wild situation, and kind of help people make the right decisions from here on out and what to do next.
Sure. Yeah, I mean, a lot of it goes back to kind of what we had talked about kind of in the fall, remembering that, one GameStop position or calls and options in these stocks are highly volatile. Also to remember that it's ordinary income tax versus, long-term capital gain. So remember that if you're trading and or selling these things, of course, now that it's January, you have until April of 2022 to worry about taxes, but something to think about as you might have a large profit in these names. But yeah, we want to make sure that you're talking about planning and actual advice as it relates to finance. This is gambling. Not to say that it's not right. As I'm checking now, GameStop's up 26%, and then AMC and Nokia are down pretty big, which are the top three names in this kind of world. But we have to say that everyone should invest how they want. We're not a big hedge fund, or as they would say, the big suits telling people that they shouldn't make decisions for themselves. But it should be reasonable, and it should be. I think the biggest thing that we want to pound the table on, it should be within a position size that you can afford to lose, and that know what your risk limits are, and know that if people are jumping in, and this is being talked about on Reddit and TikTok, not to say that there's not more room, because a lot of people thought that this was ridiculous when GameStop was at 40, and it's 10x that from here. So congratulations to everyone who was in it. And not passing any judgment on the decision, just making sure that you're properly balancing the risk and protecting yourself to either lock in some of these gains that are obviously life-changing. Part of the cool thing that we saw on these Reddit boards where people paid off their student loan or were able to pay for their mother's mortgage or, do something for the money. And that's all great. And this shift of people were joking that Robinhood, now that they've turned their back on their true customers, 2 days ago, they were the ones where Robinhood's such a great name, taking money from these billionaires and putting it into the little guy. And now that they've banned the trading, we'll see how that unfolds and as a marketing and branding for Robinhood as the company. But you want to make sure that you're locking in and at least balancing and understanding the risk levels here, because this is a story that is going to be, movies are going to be written about, and books. It's just a crazy time right now, and watching it unfold and documenting what's happening, I think, is a great idea. We're going to look back on this on Monday and say, wait, you said that's what was happening on Thursday? And that's at just the speed of, it's nuts. The speed of, as we were talking about before recording it, the speed of social media, the speed of the stock market being priced in milliseconds as it is, something that we always talk about with our real estate clients, or, they're like, we don't understand how these things can be priced so fast. So it's the pro and con to the stock market for sure. The mark to market in milliseconds and the speed of social media as ideas are flowing. And as we're recording this, things are changing rapidly.
Yeah, great. Well, like you said, we have to continue to watch this unfold. And so we'll definitely be back with more explanations as more happens and we kind of see what happens over the weekend here. But
Yeah, I think that's a great idea. And that make sure, I think we should do this probably every day to take a pulse of GameStop, Bitcoin, some of the metals, and some of the other things that's happening. Also to see that there is a correlation that the markets could get very volatile. We've had a monster run. We've already been talking to clients about yesterday. The market was down the most it had been since October. We've had a straight up line since the election. So we've talked about this numerous times, but always a good time to reassess risk, goals, how much you're comfortable with, invested in the markets as things could get rocky. As I said, if a hedge fund or two blows up because they were way too short on one of these stocks, you're going to see it, and they're going to need to sell like an ATM some of their other positions that might not make sense to you at the time. But we saw a little bit of that yesterday. As we're recording it, the market's up and recovering a little bit from yesterday's sell-off, but it should create some volatile times. I thought, as I said, on Monday, I thought that it would be more volatile. It wouldn't have taken till Wednesday, but it's just interesting to watch unfold.
yeah, totally. Well, we definitely will be back with more explanations like we said. So tune in if you're confused. Like Brad said, reach out to us. We're happy to talk about it. We'll be posting stuff to all of our social channels, Instagram, Twitter, our blog. So check that out too. We definitely want to help explain this because it hasn't happened before. And so want to make sure that those involved with it, those just watching from the outside, everybody understands and knows what's going on.
Yeah, great. I think this is great. And thanks everybody for listening. And as Ashley said, happy to answer any questions that come up, even if it's unrelated to this, or even if you're just hearing things that may not make sense to you or confusing. We want to be there for everyone to help answer and kind of drown out the noise and make sure you guys understand what's actually true and what's floating on social media.
Great. Well, we'll talk to you guys next time, and stay safe and healthy.